About 2 more minutes. Got some Forex, some crypto, a little bit of everything today. Alright, we're gonna go ahead and get this started. Appreciate everyone that popped out tonight. It is open mic, so if you ever have questions going through this as we're going through this, just feel free to ask, interrupt me. It's all good. I'll go ahead and get those answered for you. As I was saying, this is recorded, so this will be posted to the YouTube after. I wanted to get this started today. We'll pop into the technicals in a bit, but always with the psychology, understanding what we're looking for, why we're looking for it, and understanding that we can wait for that to come to fruition. And what I mean by this, right, is the market showing its hand to us. And how we can wait for this is by understanding a plan, understanding certain steps, right? And following those steps, finishing out those steps one by one so we can be able to finish those. So I'll show you what that means like in a second on a chart, but understanding that from a psychological perspective. I'll talk to you about what I look for, right, within trades, and then we will talk to you about how we can apply that within the charts. We're going to talk about how we can successfully spot reversals, understand which reversals are for which trend, whether it is bullish and or bearish, understand why it is reversing at certain areas, and understand where we can continue from that point. So talking about what we look for, right, when we are starting off as institutional traders, right, as smart money, quote unquote, traders, we are looking for that show of hand from the institutional perspective. So we are looking for the large banks, the composite operator, right, that one entity that is larger than everyone else that is moving this one asset, right? What I mean by this is by putting this analogy, this theory in our heads that there's one entity, right, one larger bank or one person that is moving one asset, we can understand certain areas and get into the head, right, of that certain person, um, where they would like to get into certain spots, right, as far as buying premium, or sorry, buying discount and selling premium, or different ranges, right, where they're targeting liquidity, where we can look to get into certain trades. Now, what we are looking for when we are getting into certain trades or looking at certain trades, right, we are looking for impulses that leave imbalances, that leave a certain reason for the market to come back to. Now, what I mean by this is to give a visual perspective. Let's draw a trend right here, a downtrend, right? Price is making lower highs, right? Lower lows. Price comes down. We see some liquidity start to be formed both ways. We see price then raid that liquidity right to the downside. We see an impulse to the upside. We start to see some, again, reaccumulation, continuation to the upside, mitigation of demand. And from that, there's that continuation. Now, understanding when we get into reversals will be in a second when we get into a chart. But as a composite operator, right, as the bank, as the smart money hedge fund, when they are stacking positions, right, getting into this scenario, they are pushing price down, right, stacking orders, just over and over again. And I'll show you what I mean by this in a second, right? So they're just shorting over and over again, pushing price down to liquidate all of these lows right here. Now what this is doing, right, is opening liquidity in the market. Now they have the ability to now open more positions. Now what this means is once they open up long positions, right, to reverse, they start to long, price reverses, and they now have these short orders understand when they're pushing price up, right? They start to push price up all the way. At this point in time, so let's take out all of this. We understand that they push price up, right? But they still have those unmitigated short orders that they push price down with over here, right? So this is millions, billions of dollars of drawdown once price is up at these areas. So what this does is now open liquidity here, right? So now they can start to take profits on their long positions that they open down here, right? To take out the liquidity here, opened up long positions. They now start to take profit. That brings price down, right? We look for the lethargic behavior, the creation of liquidity on the way down. What this does now is bring them back to break even on their short positions, right? They can now close those short positions, open up more long positions now that they are back at break even at those as well. And from that, we see that continuation. Now, this is from a composite operator perspective of how we can look to spot these reversals. Now we can look to show these on candlesticks in a minute, right? But this is that move that we are looking for over and over again as institutional traders. This is going to be shown from time frame to time frame. From a fractal perspective, you can play it from the daily to the 4 hour, right, to the 1 hour, to the 15, to the 5, to the 1, 15-second, 5-second, 1-second, right? It will be shown, this behavior will be shown on every single time frame. And every single top is going to be some sort of Wyckoff. Every single bottom is going to be some sort of Wyckoff. Every single continuation will be some sort of Wyckoff. And that's how we can look to start to see this behavior start to form. Now, what I want to show you with UJ UJ in a second here, right, is the same exact perspective. Now we need to understand overall on a weekly time frame, right? We obviously have this overall accumulation after liquidation of these lows right here. Took prices higher, broke structure upside. We saw a weekly reaccumulation, right, on this zone that brought price higher. We saw price come down, right? Create that liquidity. An accumulation formed. Price broke structure upside. We saw that impulsive move, leaving imbalances. Areas that orders were not able to be filled because of how quickly price was pushed by these algorithms, right? These institutions, that composite operator, leaving areas to come back to mitigate. And what this does, right? We get that break of structure upside. This now shows that bullish structure. We have an area of demand that we can look for price to come back to. And as we're seeing price, right, slowly create those lower highs and lower lows, we see that creation of that short liquidity, right? All of those equal highs that are created on the way down. What does this show? That buy side liquidity that is available once we get that break of structure upside, and it leaves all of that liquidity that we can just take, right? After we get that break of structure, now it opens that within the market, and now price starts to magnet that towards that. So we understand that overall we're in a bullish structure. So as we're looking for trades, we're only looking for continuations. We're only going to show or look for a reversal once it is given to us. Now, what do I mean by this? Now we're going to be looking for the same thing, right, on a bullish perspective until we are proven wrong. Now, in this case, not looking left, right? We are looking at our most recent move, understanding where imbalances are, where our most recent high was created, and what caused that, right? So if we are looking at this impulsive move to the upside right here, we understand that right here we see a distribution, right? That rounded top, We can see an accumulation right here, a distribution, took out this low right here, liquidated that low. We then broke structure upside, reaccumulated, and then from that, we see higher prices. Now, what I mean by this reaccumulation, right, that rally-based rally for higher prices creates demand. Now we understand demand is within this area. Now we can look to see, well, where was that high broken and where was that imbalance created? Now we can see that imbalance that was formed right here. Now a reason, right, for price to come back to these areas. So now I have a higher time frame narrative. I have a demand zone as well. Let's go ahead and draw this out right here. We'll get this fixed. We have a demand candle right here, and the reason that this was formed, right, is because we can see this consolidation candle, right, this doji candle, this undecided candle that didn't really tell you where price was going, either up or down. Obviously, it did close bearish, so we obviously understand that on the lower time frames that we created a high that caused an internal low. Obviously, new demand was created, and from that we saw that break of structure upside, and we get, right, then that demand that is formed from that break of structure upside. Now we are looking for a price, right, to come back to this area, fill those orders from the algorithms, pushing price down, liquidating orders in here. If I go in the lower time frames to show you this, you can see exactly what I mean, right? You get that liquidation rate to the upside, price takes out highs, we get a large candle to the downside. Now what is retail doing within this situation, right? If we're on the lower time frames, 15-minute, or even, right, that dumb smart money thinking that, okay, this is a distribution bar pattern, whatever you want to think it is, right? Price comes up, makes that high, liquidates that high, and then we see that move to the downside, that large displacement candle. And now retail is shorting this move right here, not understanding that overall we are still putting in higher lows, right? Price is still respecting this low that caused this new high. And from that, we created new demand, and we saw that move to the upside. Now, overall, when we are looking for trades, right, we want to understand our market structure and then find our range, find our liquidity within that, and then we can start to look for those trades. So we are going to wait for that range to be created at this point in time. So it is created there. So now I have an area where demand was formed, and then I have that range that was formed as well. I have demand, I have my premium and discount. I can now look for liquidity within. Go ahead and bring this back a little bit here. Now understanding that I have a high that was formed, right? If I'm on a 4-hour chart, I'm looking for the 1 hour to break structure downside, and from that I will be able to put in now my 4-hour, right, higher high at this point in time. So I need to look for my higher low coming into this area, and looking for my higher high, I need to have an hourly break of structure downside. Otherwise, this could just be reaccumulation, and price could continue to draw for the liquidity higher and higher into supply zones. Prices over here, right? Liquidity over here. We don't know that until the market shows us that. So we need to see that displacement, break of structure to the downside, introduction of supply to show us exactly what we are looking for. Let's go ahead and bring this back here. So now we see, right, this low that caused this new high right here. We see this high that was caused, right? We see this low that caused this internal high. But this low did not cause a new high, right? We see internal breaks of structures downside. So now what does this tell me? It tells me that supply is starting to be introduced if I go on my lower time frames. we can start to see exactly what I mean, right? We get this low that does not cause this new high right here. From that, I'm looking at this as a weak high, or sorry, as a weak low, right? A strong high. If I get that continuation to the downside, if I can get another break of structure to the downside to show me that supply was introduced, right? So if we are looking within the scenario, understanding where supply was introduced, we can see that this low was formed after we get this internal possible break of structure to the downside. And then from that, right, we get price coming back up. Internally still bullish. Price comes back down, mitigates demand from these candles over here, continues to the upside, right? Takes out these highs. We are still looking at an overall bullish, right, formation. So unless we get that introduction of supply from break of structures downside, we aren't looking to take the trade quite yet. What happens? Price starts to come up, right, and we get that manipulation of highs, creation of that sell side liquidity, right, showing us that long buyers are getting in this trade right now, trying to take this higher. Maybe it's on the EMA, whatever it is. Their indicator is telling them, their fib is telling them that price wants to continue to the upside, so they are getting into these trades. And what happens, right? We get that manipulation of highs, and then we get a displacement candle breaking structure to the downside. Internally, we can understand that this low here, this reaccumulation that occurred, caused a new high, and then it was broken to the downside here. Now we can see this displacement candle that was formed. We see this candle before the candle that broke structure to the downside. So we now have a supply zone that is formed, right, within internal structure. Overall, we still need to see a continuation, another break of structure to the downside to show us that price wants to continue to lower areas down here. Now if we play this out, we now get another, wait, let's see here, price has not taken out any lows yet, so right now this is still internal. Right, we can see buy side liquidity that is created here. Price comes back up into this supply zone right here, and then we start to see more displacement candles to the downside. Now at this point in time, I have one internal break of structure to the downside, and then I get another break of structure to the downside with displacement to show me that supply is being introduced within these areas. So now I have that hourly. I've confirmed the hourly with a 15 minutes. So if we are on the hourly time frame, we can see this break right here. Then we can see the lower high confirmation from the 15-minute right here. We receive our break of structure downside here. Now we can look to confirm more areas of supply that are being introduced, but we are looking for that footprint, right? That displacement. So at this point in time, this is what I'm highlighting, right? This is my impulse after liquidity rate to the upside. So after all the shorts were out of the market, right? That gave the ability for the algorithms and the institutions to now get into positions. They got into positions, broke structure to the downside, introduced supply. We are looking to confirm that. We see supply that is formed here. We see more breaks of structures downside, more supply that is created here. We can look to confirm that now. With price coming into these areas, we see highs that are formed. Price takes out those highs. We see more breaks of structures downside, right? So now we have this idea, right, that price is continuing to introduce supply. Now, overall, I now have a area, right, of demand. So my higher time frame narrative is showing me that I have an area of demand to look for, and my lower time frame narrative is showing me that I have breaks of structures downside, right? Displacement candles, supply candles that are formed because of that, right? I get that final break of structure downside right here from this low right here, introduction of supply, continuous break of structure downside. You guys can see the impulse candles on these time frames, right? These areas that we were highlighting showing us that supply introduction on higher time frames, even the hourly, right? It is still showing us that relative behavior. Now we have an hourly candle. All right, I again have another supply zone. So if I'm just playing the hourly structure, confirming that supply, understanding more displacement, and I now have a target. I can now look to get in the trade, right? Stops over the next lower high and look to continue to take this to the downside because I now have that full confirmation. That price is going to now continue to the downside due to the fact that we got those hourly breaks of structures to the downside. That confirms my 4-hour higher high has been put in. I'm now looking for a 4-hour higher low, so I need price to now come back down to areas that it has not filled yet, right? Start to fill those orders, start to accumulate, manipulate lows, leave highs, and then start to show breaks of structures upside so I can look to get into trades. So now at this point in time, we had everything that we needed. Price now goes into that area. We tap into that area, and we are completely out of our trade. So even though price is overly bullish, right, overall bullish, we still use structure confirmations and these lower time frame confirmations, right, to show us that that supply was introduced on each of these moves. We can see another impulsive move to the downside here that broke overall this entire range. So we got this break of structure downside right here. We get a large impulsive move to the downside right here. And you can see over and over where algorithms continue to enter the market, right? We can see where price creates those higher highs and then starts to create those lower highs and lower lows, starts to create that liquidity. And then we get that impulsive break of structure to the downside, and then lower highs and lower lows are formed after that. And we get that continuation, that supply introduction. We are just looking for the impulsive move, the supply, right? The candle before that, displacement candle that broke structure to the downside. We can look for institutional candles, right? If we are looking here on the 15-minute after we got that full break of structure to the downside with displacement to show us everything that we needed. Price came up into these areas, right? Created liquidity. So let me go ahead and delete this right here. Created liquidity with these highs, rated this liquidity to the downside, came back up, mitigated institutional candles from this supply that was created right here. So now we have lower time frame areas, right, that we can look to confirm it with. If I'm doing this all the way to the 1 minute, once we get our range break, that is telling me everything that I need. I'm waiting for now the 1 minute to switch bearish. I get price moving to the upside, right? I then get a break of structure to the downside. I'm looking for the candle before the candle that broke structure to the downside from my 1 minute. Break of structure to the downside right here. So let's go ahead and do this like this. So we get a break here. I'm looking for a lower high, right? And looking for the continuation. So if I'm looking to confirm it on my 1 minute, after coming into these areas, right, tapping these institutional candles, let's go ahead and take this off. Price comes up into these areas, again takes those highs. So now that all the shorts are out of the market, we are looking for algorithms to come into the market. We get a break of structure downside here from a low that forms a new high. So if I go ahead and bring this back, understand we're on the 1 minute time frame right now, but it is still that same exact behavior, right? So now that we have the full confirmation from the 15 to the 1, right, we get a minute structure break to the downside, and then we get another structure break to the downside to show me that price has put in that supply. I'm looking for that candle before the candle that broke structure to the downside. We receive one. So now I have another minute supply zone. On lower time frames, there are probably institutional candles higher into these areas, but we can look to take it off the top. And then again, now that we have that full confirmation, we see price creating lower lows. We are looking for a lower high now. On the minute time frame, we get a minute structure break to the downside. We can now target that higher time frame demand zone. Even though, right, we don't have that 4-hour break of structure to the downside, overall, right, we can't target these areas down here. We still need to understand that this is counter trend, so we can target areas of demand and liquidity lower in discount of our overall trend versus targeting areas down here or targeting areas on higher time frames lower, understanding that is unfeasible, right? The market needs to show us that it wants lower for us to be able to take trades lower. And that's one of the beauties, too, of these concepts is because I can understand that I really don't care what price is doing, right? Because all I'm waiting for is price to show me that algorithmic jump, right? That push, that price wants to move this way, breaking structure with impulsive candles to show me exactly what I need, right? Because it is objective based. I'm looking for entry here, TP here. Why? Because of liquidity, because of demand, because of breaker structure's downside, because what the market has shown me over and over, waiting all the way to this point, right? To get a final range break, introduction of supply, minute structure break to the downside after coming into this area, taking highs, showing that distribution, right? That sign of weakness, those early longs that are getting into trades. So we see the early longs get in. The highs are ran first. We get breaks of structures downside, introduction of supply. We are now in our trade, right? And we get that full final move to the downside. So let's just bring this out to the 15-minute. Wait for price to now come lower into demand zones down here. So now if we're understanding this from a counter trend perspective as well, we see a demand zone right here, looking at the 15-minute, right? We can see our institutional candles here, and we see reaccumulation right here with a demand zone right here as well. So understanding that this is still counter trend, some feasible take profits, right, could be these areas of demand that show, right, that same exact imbalance. That price could possibly come back down, accumulate, reaccumulate, right, and move higher, leave this here. That is perfectly okay because we are still taking profits, right, at feasible areas due to the time frame break of structures downside that we have received and the overall narrative that we have. So now we wait for a price to come back into our demand zone. We are watching price coming into our demand zone, understanding this as well. So if we don't get too laser focused on, we see this impulsive move, put this demand zone here or here, right, and then just walk away. We need to understand still, what is price doing? How is it behaving on the way down, right? Is it behaving the same way it behaves on the way up? Or is it showing that lethargic behavior, that creation of that short liquidity, right? The buy side liquidity, those equal highs that are being formed on the way down to show me that once price breaks structure to the upside, shows that impulsive move, then it gives me everything I need and I can continue to look for higher prices. So we want to see price, right, slowly come into this area. And as we're watching here, we can see price start to manipulate those lows, right? We start to show some signs of strength. So price starts to take out some highs. It starts to come lower, leave some highs, so we can start to see all of that short liquidity, right? That buy side liquidity, all those retail stops with stop losses over these highs, trying to take prices lower because they think price is going to break structure to the downside. They're late, right? This is why we don't want to FOMO into trades. We were waiting for, right, that those discounted prices for bullish scenarios or those premium prices for bearish scenarios. Now, as price is coming into this demand zone, we can start to see, right, it creates those lows. It takes out equal lows right here that are being formed, mitigates our supply zone, breaks structure on the 5-minute right here, so we can start to look for areas of demand, right, to show that price wants to move higher. We see that impulse that is created, right, breaking 15-minute structure to the upside, so that is now telling me exactly what it told me over here, right, the impulse to the upside, to the downside, introduction of supply. Now we have to understand from a counter trend perspective, we need to receive all of the introductions of supply, right, from time frame to time frame to get the entire move. Now from a bullish perspective, one impulse, right, one higher time frame break of structure to the upside, 15-minute structure break to the upside, is now telling me that the hourly wants to pull back. Now the hourly within this scenario has been creating lower highs, right, lower lows, and then continuing to the downside. I now have an area of supply from this drop base drop, right, this redistribution right here on the hourly to look to possibly take profits if price doesn't actually, right, respect this area of demand, continue to the upside, instead puts in another lower high, continues to the downside. Maybe it wants these areas down here or this liquidity over here. I don't know, right? We are just following the trend, what it is showing us and how it is appearing. Now we saw that impulse that was created. Go ahead and bring this back. Again, that same exact thing that we saw on a higher time frame scale that we saw right here, that we looked on the 15-minute, we saw right here, right? We're now in the 5-minute. We can see that impulse that created all of that imbalance, that candle before that candle, right? That broke structure to the upside. So understanding that this is our redistribution, our accumulation to the distribution that liquidated these lows as well as mitigated this demand. So understand this, right? We have this liquidity that was formed here, this buy side liquidity, showing us that shorts are getting in trades. They're comfortable right here, right? Price pushes down and liquidates the lows. So we're manipulating the lows, again, leaving the highs, right? We can see all of these equal highs that are being formed on the way up. So what happens when price breaks structure to the upside? All of this liquidity is now available for price to completely take out. And we need to look for the continuation versus this market structure, right, type of theory, because in reality, right, price isn't going to move like this, right? It is going to move in this type of behavior, right, where we have the continuation, reversals, drop base drops, right? This Wyckoff behavior where we're not looking for this overall higher high, higher low, higher high, higher low, or on the opposite side, right? Lower high, lower low, lower high, lower low. And that continuation where we're looking at every external point, because market is going to continue on us, right? Leave unmitigated areas and instead create supply or demand. And for that, we can start to look for these trades when getting into these demand or supply zones, and we can start to see the creation of demand or supply. So on the 5-minute, right, I have an institutional candle as well as a candle before candle that broke structure to the upside. A demand zone that is formed. So now if price comes back into this area, right, I have an available trade to look for. Again, we want to see that lethargic behavior, the creation of highs and lows coming into this area. As we're watching price, we see the creation of more buy-side liquidity. That is telling us that price is leaving reasons, right, to come back up. So as we are coming back down, mitigating demand from an impulsive move that broke structure to the upside, price is leaving reasons to come back up. Very important. Once price comes into our zone, we see a structure break upside. We see another structure break upside. An impulsive move is formed, leaving imbalance, right? Leaving areas to come back to. If we are looking on this lower time frame, so we get this first move right here. High causes this low. If we are looking on lower time frames, we can see price rated liquidity to the downside and then broke structure to the upside here and then broke structure to the upside here. So unfortunately, I can't show you the seconds time frames on this certain pair as it'll take me out of replay mode. But understanding if we are just looking at the wicks of this certain pair, right, we can see that price came down into this area, created a high, came back down, right? We can see these equal lows that were formed right here, so that it's showing me early longs that were getting into trades. And then price rated that liquidity with this wick. So on the lower time frames, it looks like this, right? We get that move upside. Price creates the lows, comes down, raids that liquidity, breaks structure to the upside, and then we get that move. Price then breaks structure here, right? We have an area of demand that is formed. So we are looking at this candle, right? We can see that demand that is then absorbed. We see another liquidity rate on lower time frames and then a push to the upside. So now I have an institutional candle, an area of demand from this reaccumulation that push price higher, right? Left imbalances. I now have the 5 to the 1. Price is overall bullish. And then now I have an available trade to look for higher prices. Stops underneath the demand zone or underneath these lows right here, however you want to risk your trade and however you're risking your margin. You now have an area of liquidity internally to target. So if price were to come up into these areas, right, respect these areas of supply, and then from that, right, create a lower high, move lower into these areas, raid liquidity, right, mitigate lower areas of demand, pick up more orders. We don't know that yet. So we can target these areas first, right, or target these overall. Now, understanding that we're bullish overall, I'll be looking to target those higher time frame supply zones, right? Areas that are unmitigated. Now, if we are looking within this supply zone, looking to the left here, right, we can see areas of displacement higher up here. We can see areas of liquidity as well. These are all valid areas to possibly take profit. We just need to understand what time frame we are trading it on. Now we are waiting for price to come into that area, right? Tap into that area. From that, we see price tap into that area, right? That same exact thing from the other side. Again, that impulse, right? That impulsive move. So we have one right here. And then we get another impulsive move to the upside right here. Breaks of structures, right? Impulse. We have a demand candle that is formed, institutional candle. From that, we can now take price higher to the upside, targeting liquidity and or areas of supply overall. We want to see price then create those higher highs and higher lows. It comes back into that area, right? Taps that one more time, comes into our area of supply that we had targeted, right? And from that, we see we can completely get out of our trade here. Now we can still target that higher time frame liquidity. We'll just play this out, see exactly what happens. Yep, we ended up hitting that liquidity from the supply zone overall. Price came up, right? Created more equal highs, took out those equal highs, and from that we got that overall continuation. So at this point in time, right, if you are leading runners or understanding that we are bullish overall, right, we can target these higher time frame weak highs here from this 4-hour overall bullish trend that we have put in, right, from this low that caused this new high here. If this lower time frame structure is broken, which it is breaking, and we see price come back in down into these areas, right, mitigate these demand zones, from that continue to the upside, then we will look to take trades to the upside on this pair. But you guys can see how on each side of the market, right, we are still looking for the same thing. It doesn't matter, right? I need my confirmations from time frame to time frame, as well as that impulse, that displacement, looking for the candle before that displacement candle that broke structure downside. And now we have these available opportunities on both ends of the market, because if I'm in this if I'm looking at trades over here, I see this impulsive move to the upside, and I get weary of this move to the downside here, and I'm not in trades, right, from this break of structure to the upside here, and I don't get in any trades, and I'm like, well, I see this entire move, and I'm like, well, I missed it, right? The opportunity hasn't gone anywhere, right, because I now have a 32 to 1 opportunity available within a counter trend, right? Even though it wasn't this huge move, we're looking at, we can look at a 12-hour, right? And look at this move and say, well, that wasn't a huge move at all, right? I got a 32 to 1 on this move right here. I can look at this on a daily chart, and it's 2 little candles, right? And you now have all of this available profitable opportunity, right, due to market structure and these lower time frame confirmations and understanding your relative time frame that you're trading them on. Because if I am trading it on a 4-hour time frame, right, and I don't, or sorry, on a 4-hour time frame, and I don't get an hourly break of structure to the downside, then why am I looking for shorts, right? I just want to look for continuation, because these wicks could just be a liquidity rate to the downside. Price could break structure to the upside, right? Target this buy side liquidity that was here and continue to the upside. Nothing is telling me that price wants, or that price is creating supply, that it is showing me, right, that price is starting to put in those lower highs, lower lows up until the point that it is, right? So until then, we can set alerts at these demand zones, right, at areas of supply and certain highs and lows, strong highs and lows, so we can wait for that, right? And we cannot get into this point in time to where we're staring at this chart trying to catch the fattest move, or even catch a top or a bottom. You can see how waiting all of this time and not entering up here, right? We didn't enter up here. We didn't enter off this supply zone, or this one here, or this one here. We got 3 structure breaks downside to show us that supply was formed. We got the minute structure break, distribution was formed, and then we got feasible take profits, right? Areas of imbalance, as well as that overall demand zone, and our overall narrative of price putting in that higher low. So now we have opportunities on the way down as well as up, so we can get into this love, basically, or this feel for certain pairs or certain coins, certain charts that we are starting to trade. And we can understand that on a weekly chart, right, or on a daily chart, we look at this and we see 2 little candles and all the profit that we made within that, right? Now we have all of this opportunity within one chart to be able to take all of these trades and get in all of these situations and start to learn the behavior of how price actually is delivered, right? Because it isn't delivered by just this higher high, higher low standard. Yes, that's the theory of what we are looking for, but understanding that it is not moving like this, right? It is moving to where we are creating that manipulation of lows, right? Continuation to the upside, reaccumulation, continuation, distribution, moves to the downside, another drop base drop, right? More creations of supply and demand to show us that price is moving a certain way. It is showing us a direction and showing us where we want to trade. Now, J Ray was asking me about the introduction of supply. So when I talk about introduction of supply or demand, I'm looking for both market structure as well as displacement, but I'm also looking for a liquidity rate. Now, the liquidity rate is going to show me that algorithms and institutions have opened up liquidity within the market, and then if I receive a market structure break after that, then that is showing me that new demand or new supply is introduced. Now, what do I mean by this? Now, overall, right? If we are looking at a demand zone that is being formed, so let's look at it this from a just regular market structure perspective. So we have a lower low that is created, a lower high that is created, lower low, lower high, lower low, liquidity that is formed, and then we have that raid to the downside, and then we get a break of structure to the upside from this supply here. This high that caused a new low is broken. We get that break of structure to the upside. We look for this area because this is the area that algorithms push price down to open up liquidity within the market and enter their own positions. So now we are understanding that they have short positions, right? That they need to then fill for price to come back down into this area, as well as possible long positions, right? We don't know. But we are looking for that behavior overall to understand that once price comes back into this area and then shows us that same exact behavior that we are looking at overall here on lower time frames, then we have that introduction of demand versus that supply, right? And continuation to the downside. Supply is going to be an area of sellers, demand is an area of buyers. Institutional candles is different as far as you could call them quote unquote order blocks, right? Institutional candles are going to be your last buy before sell candles or last sell before buy candles. Those will come following that liquidity rate. We'll see a liquidity rate to the downside or the upside, and then we will see either a bullish or bearish engulfing candle in the opposite direction, showing us that algorithmic push, right, in the market that is showing us that reversal and introduction of demand or supply. I hope that made sense. It's going to get very confusing, right? Looking at these candles, getting on the lower time frames, but I really recommend just starting with the higher time frames, going from the 4 hour to the 1 hour, or even sticking on the 1 hour to the 15-minute, right? And getting a feel for it and getting comfortable for it because it is going to be a lot, right? There will be a lot of noise, but understanding that we are just looking for those certain moves, those certain impulses, those certain show of hands before we get into trades will give us a lot more comfortability when entering trades and the availability to understand that look, we got an entire range break, we have introductions of supply, price should now come back down to fill areas of imbalance lower down here. So we have areas to take profit, right, and areas to take profit overall, as well as a higher time frame narrative. And I am now in tune, right, with this certain pair, with this certain chart. I'm comfortable with it. I can walk away from it after entering and know that my trade is going to go my way, and that if it doesn't, I can go back and understand exactly why it didn't. And this is something too you'll start to notice when you get into trades, because you'll get into them and you'll know if it goes wrong, why it went wrong before it even goes wrong. And that is these positions that we want to get into, because that now allows 10 times more confidence, right, in your trading style and how you are looking to take trades. From the psychological perspective of it, I was watching some YouTube video. I think it was this dude, it was like Alex GFX or something like that. But he was just talking about psychology, and I wanted to kind of tell you guys about this as well. But he said this from a surfer's perspective. So, from the mind of a surfer, just bear with me for a second here. Think about a surfer, right? They go, let's think about it like this. They wake up, they get everything ready, right? Him and his boys, and they want to go out to the waves, catch some waves. They get out to the waves, they have all their boards ready. It took them 2 hours. They drive out there, and there's no waves. Are they going to surf the waves, right? Are you going to still get out there and throw your board out there and try to catch some waves? You physically cannot, right? You cannot make something that is not there. So if we take that from a trader's perspective and say, "Oh, okay, we'll try another day. We'll come back another day, or I'll come back another session, right? I'll go look when there's volume in the market, when there's volatility in the market, versus trying to stress myself out with these liquidities, right? Or sorry, not liquidities, with this manipulative state of the market, of these candlesticks that are printed to you, understanding that we have objectives, as well as when it is not available, it is not available, right? If the trade is not there, it is not there. That is completely fine, because another one will be available soon. So taking it from that, right, surfer's perspective, if the wave is not there, we can't surf it, right? Once the wave is available, once that wave is shown, once that push is to the upside is shown, that impulse to the upside or downside is shown with imbalance, right? And that demand candle or supply candle that is formed, institutional candles, areas to come back to, reasons to come back to, and as well as the confirmations when getting into those zones, then we can look to completely fill those trades. Now we're going to go ahead and look at Bitcoin and ETH here in a second, as well as I also wanted to take a peep at ADA, talk to you guys about ADA and what I'm looking for there. Very, very good looking chart, but we're going to go ahead and go to Bitcoin first. And Bitcoin and ETH, very, very similar perspectives that we are going to be looking at. This is going to be the same pretty much for the entire market as far as crypto moves. But we saw this invalidation of now supply, right? We were talking about how price was coming down into these areas of demand lower here. If we accumulated, broke structure to the upside, saw the demand, which we did here, right? Those break of structures upside, demand candles that were formed, institutional candles that were formed, continuation to the upside, right? Imbalance that was left versus these clean highs and lows that were formed. So let me go ahead and get rid of this real quick. Let's just delete all of that. And we saw the supply that was formed at the top of the range. We talked about the break of structure that we had, as well as our demand down here. We saw price come into those areas. So let me go ahead and do this demand here. Actually, it did not, or it might have. I'm not sure if it pipped it or not. Let's just assume it didn't, because I have this liquidity here. But I have this liquidity here. The reason for that is these equal lows that we created, these relative equal lows that we created when coming down back into these areas. Now, just because equal lows or equal highs are formed, this is something that is super important as well, does not mean they're a magnet. They need to have a reason to travel there, right? They need to have that push, right, to travel to those certain areas of liquidity, and we can understand where that draw is going to be overall, because we can see where the institutions are entering and then understand where they are targeting, right? So this supply that was formed right here from this range, when this high caused this new low right here, was tapped into, right? And then we saw price form that lethargic behavior, come down into these areas of demand, mitigate that demand, break structure to the upside. We have now invalidated that supply. We are poking out at the top of the range right now overall, so we can call this a break of structure upside. There's going to be two things I would look for in this situation once we get these range breaks like these, because this is very iffy, right? There are a lot of traders, right, who see this range break and then they're like, I want downside. There are a lot of traders who see this range break and then see everything to the left, right, all this imbalance, and say, bullish, it's going, right? It's just going to completely go to the upside. This is where it can get tricky, and this is where we need to understand what type of Wyckoff is going to come into play, whether it is going to be a distribution as far as a reversal goes, or it is going to be a continuation as far as a reaccumulation would go. Because in a distribution scenario, right, price comes up, we see highs taken, we see price form that sign of weakness, come back up, possibly create a U-tat or not. This is not going to be the same pattern. It is just understanding the behavior overall, and then put in a drop base drop, right? Continue to the downside. In a distribution scenario, we see this. But in a reaccumulation scenario, we will see this, a liquidation of lows. So price liquidates lows to the downside. And then we will see price start to introduce demand. And then from that, we have a distribution to then accumulation. Price puts in a reaccumulation overall, and we see that continuation to the upside. This is where it gets very tricky because a lot of traders will be getting into trades, right, at this certain supply zone right here from this distribution right here, right, or at this supply zone right here. But understanding that overall we have put in this bullish behavior on the daily and the 4-hour, and we have areas of imbalance as well as areas of demand to possibly come back down into. If price doesn't completely respect, right, those areas of supply and continue to break to the downside, then we aren't going to be looking for those downside trades. Now, obviously, yes, overall in the weekly, we are still bearish, right, from these breakout structures downside, these areas of supply. But again, we do have this imbalance right here, these imbalances right here, areas of supply that are unmitigated as well. And we also have put in this bullish behavior, right? So we could see price possibly continue to the upside right here. If we are looking for a reaccumulation, we are going to be looking for this type of scenario. We want to see that weak distribution to the downside versus a strong distribution, breaking structure to the downside, showing displacement, right, below these areas, below these candles right here, not showing us what we want to see, right? We want to see lethargic behavior to the downside, manipulation of lows, and then breaks of structures, impulsive candles, and then from that we can look to continue to take trades to the upside. But we are starting to put in my opinion, some type of unhealthy behavior as far as all of this sell side liquidity that we are creating. Again, it's not a magnet, right? We need to get breaks of structures downside, and then we can look for areas to target as far as liquidity goes. But overall, I do believe we are bullish, right? Breaks of structures upside, obviously out of the range. We could put in a reaccumulation here, or we could distribute and come to areas lower. I'm going to be waiting for price to put out that full schematic at that point in time, and then we can look to take any type of trades. Now, ETH probably same exact story. Yep, very similar. Again, it is starting to manipulate highs, right? We can't call an entire break of structure to the downside unless we see weak lows, right? If this low doesn't form a new high right here, and then we receive displacement candles to the downside, right, on the 4-hour, on the 1-hour, then I can look for a daily overall pullback to these areas of demand that were formed and look for continuation to then the upside. Or if we see, right, that sign of weakness that is being formed, we see more highs being taken, right, a UTAD that is possibly being put in, and then we see a drop-based drop, continuation to the downside, then we're looking for an overall, then accumulation to distribution, an overall drop-based drop, so drop, base, drop, right? And then that overall continuation to the downside if we receive this behavior. But personally, like we have been saying, right, for the past week, 3 weeks, for the past month, we are bullish, right, on ETH and Bitcoin overall. And from that, we have been seeing higher prices over and over again, taking out every single short, right, that is continuing to try to short, right, these tops. You can see all of the equal highs that are created. What happens when price comes up to those equal highs, right? We take those highs. Everyone's like, even dumb money, right? Dumb smart money is like, okay, we took highs. We should now continue to the downside. What happens? We take highs, take lows, introduce new demand, gone, right? All of that buy side liquidity is now available. All of these imbalances are filled, and from that we see that continuation. I
Shorts
also
get
got
clapped
every time, dude. Every time. You love to see it, dude. ADA. We've been talking about this one. weekly rally, base rally that was put in right here. This demand candle that was put in right here. This looks even better now, dude. On the weekly, from these highs that caused new lows right here, we are seeing breaks of structures upside. I have a demand candle that is formed now on the daily. I have an impulse, right? Area of imbalance, reaccumulation that was formed right here. So I'm now looking at areas around 46.5, right? Or if we see price continue, right, to create higher highs, and then we see a distribution put in and price comes back down into these areas, we will wait for confirmation coming into these zones. But ADA, very, very, very clean chart. Sweeping lows, still keeping this low that caused this new high. Understand this. This low internally that caused this new high is still being kept in place, and we are still continuing to break structure. So I can see overall price mitigating higher time frame demand zones, or sorry, supply zones up at 83 cents, even around $1, right? 88 back to $1. I really, really, really like this chart. Very, very clean chart. Couple of alts are going to be looking like this. I'm keeping my eye out for them as well. But ADA is just one that I want to show for you guys. But if you guys have questions for any other charts or anything like that, go ahead and let me know. I will be wrapping this up in the next few minutes or so. So if you guys have any questions, feel free to speak them now. And if not, we will go ahead and wrap this stream up. Like I said, this was recorded. And also, I appreciate everyone, again, who popped out, getting the education, getting in. Like I said, this is something that you guys need to take with a fresh mind, take them to the charts, and get that down, right? Get that perspective, that institutional perspective. Understand that they are greedy, right? I am very greedy. I wanted to find the way, right? Find that certain quote unquote strategy that led me to continue to be greedy. And what that was, right, was to be able to find these lower time frame Wyckoffs, right, coming into these zones of demand or supply for confirmation to be able to lower my risk, right? Have smaller stop losses, increase my reward, and therefore make more money, right? So again, I appreciate everybody who came out. If you have any other questions or anything like that that you didn't want to ask, but you feel or you want to ask me in DMs or in chat or anything like that, go ahead and let me know. Thanks again, everybody, and everyone, you have a good night.